Alright, I'm just going to test my volume. Alright, I'm just going to test my volume. Okay, so let's start. I guess it's going to be brief. Okay, so from MQ, price is trading right back into this weekly CB. Okay, after taking out the sell stops here. So what I'm thinking is that it might want to attack this high, and if it attacks this high and close above this CB here, I would use this as inversion fair value gap, attacking the highs here and eventually the all-time highs. Okay, um, this right here, it's basically ICT's, as he likes to refer to it as phantom trend lines. So three taps, but never making a higher high. So this would be the easiest run on liquidity, the one in the middle, and then we'll see what happens next. Um, so far, it looks bullish for NQ and basically the indices, but you just have to keep in mind the higher time frame structure for dollar is still in play. Okay, so heading down into the daily, right now this is a valid breaker with a bullish order block and with a inversion fair value gap right here. So price can retrace into this area and provide long opportunities to take out this high here, or maybe even the highs here. Okay, um, above these highs here we have a volume imbalance right here, and we have a volume imbalance right here as well. So these are likely draws on liquidities after this high is taken, right? So far I am thinking, in my opinion, that this is a stop hunt and we are going to go higher from this low here. So this is basically the bottom. Okay, but because of the current environments that we are in, and because of the conflicting idea with the dollar index, I am going to be a little bit more cautious, leaning to the bullish side of the market. Okay, so best case scenario, I would prefer this high here to be validated, which means that it trades above this high and then finds support at this inversion fair value gap on the weekly time frame. Right, so because the thing is that it could just run this high here as SMT. Right, if you take a look at ES, it's going to take out the high here. Okay, and we have a fair value gap above the high. Okay, inefficiency. So we could have ES making higher highs, and then we have Nasdaq making lower highs. That is totally possible here, and if that's the case, then we are in for a low probability. Maybe I wouldn't use the word low probability, but a 50-50 bias, right? And then we will want to see if price is willing to move lower together inversely with the dollar, right? So this is my framework for NQ and ES. They're both similar, just that right now it's slightly more bullish than NQ because it has been dropping lower, right, as compared to SQ. I mean NQ. Okay, so if you use the fit projections here, we have basically reached into the negative 4 standard deviation. Right now, trading back into 50% of the entire range right here. Okay, would it continue lower? It all depends, right? So we shall see. This is for NQ, and for ES, we have traded way beyond the -5 standard deviation, and right now I believe it's going for this high here above equilibrium. Okay, so overall narrative for bias for overall bias for the bears have yet to be changed. Okay, we are still in a bearish market until um, until this high is taken out on all the indices, right? So that it's my I will remain that way on the higher time frames. Okay, but obviously you can trade in both directions on the lower time frames. Right, so let's move on to the dollar, and I'm going to show you why there's a conflicting analysis. So right here for the dollar, it has basically reached into a busy at the start of the month. Okay, so this could be the manipulation lower to trick everybody to go short on dollar, right? This is the high, and then we're going to, crash lower based on the current narrative that we are having in the media as well. Okay, so this could, for me, I am still bullish on dollar until it closes below the mean threshold of this order block. Okay, so mean threshold would be right here. Any price on the monthly basis closing below the mean threshold, then I would consider bearish prices for dollar. But right now at this point in time, I'm still bullish for dollar, and at the same time it has higher time frame objectives that has yet to be met. So if dollar is bullish, um, technically you would expect the indices to be bearish. Okay, so right here we have a conflicting analysis, but it doesn't mean that they have to move in tandem. Okay, so if you have been trading for the past 1 year or watching the markets for the past 1 year, there are instances where indices moves together in tandem with the dollar, which means you see dollar rallying and you see the indices rallying as well. So just keep in mind of the current environment that we're in. Okay, so basically reduce your risk. Okay, anytime something can happen that's going to push the dollar higher, and then you're going to see some sort of manual intervention coming in based on the events that's happening around the world. Okay. Yes, hi. Hello. Lord Money. Hello. So, yep, I'm gonna move on to HSI. So for HSI, it has reached into this bullish fair value gap here, right at the mean threshold. Not the mean threshold, but basically the midpoint of this range. Okay. What I would like to see is this fair value gap continues to support lower prices. Okay, why is that so? Because price has closed. Let me just check. Okay, it looks like, but I need to confirm. Yes, so price has closed below the consequent encroachment of the wick here. So technically, it should run lower, right? So I am treating this as a fake move higher for HSI. Okay, until we can trade above this level here, which means any candle closing prices above this high, which would come in right around at 18,893, then I would take off my I would remove my bearish bias on HSI, right? For me, these lows are a little bit too clean, right? And I'm thinking that it's going to be revisited later. So let's take a look on the daily chart to see if there's any confluence. Right. So Yes, we do have this equal highs here. It may want to run it back up again because HSI, um, if you can tell from the market structure, it's a high resistance liquidity run. So during high resistance liquidity runs, it usually pullbacks a lot, takes out some measure of sell stops or buy stops, and then drops to the target. Okay, so yeah, I believe I am still bearish on HSI. Okay, I don't think we're gonna leave the lows here, right? Okay, so that's for HSI, right? And I think that's about it for today. And because next week is gonna be daylight savings, so it's better to manage your expectations because it's gonna be a little bit choppy, and with um, Jerome Powell having speeches next week as well. For me, it's a low probability week. Okay, so yep, I'll see you in the next session, and I'm gonna try to maintain this length of a video for the weekly forecast. So basically, I'm just gonna be focusing on the US indices, DXY, and HSI, and nothing else. Okay, and I'll see you guys again. Good luck trading, and signing out.